The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, ladies and gentlemen. Welcome to Magicbricks webinar, our endeavor to empower you with the insights on the Indian real estate market performance and consumer sentiments. The topic of today's session is real estate, the most rewarding asset of the portfolio, if you read the market right. And our guest speaker today is E. Jayashree Kuru. She is Head Content and Research with Magicbricks. Jayashree is a business journalist with over 2 decades of experience in working with print, online and electronic mediums with the Times of India, the Economic Times and the Financial Express. She specializes in analyzing real estate data to come up with usable solution to users. She works with consumers to provide advice on using available information to make wise investment decisions. So, without further delay, I introduce you all to our guest speaker. Over to you, Jayashree.
Thank you, Aradhana. Good afternoon, ladies and gentlemen. Welcome to the Magicbricks webinar. Today we are addressing a very interesting topic. Can real estate be the most rewarding asset of your portfolio? It can be if you read the market right. Real estate investment markets, there are distinct property cycles in the market. There was a bull run, that was 2006 to 2008. There was a slowdown between 2009 to 2011. There was a bear run, which means that the market was hardly transacting, and that was 2012 to 2014. So how do you make money through all the cycles? And if you actually read your markets right, you can make money through all the cycles. Normally in the real estate market, there are 2 development cycles. One is a brownfield development cycle where old property is redeveloped. Old areas of the city are redeveloped. This started sometime way back in London, which decided to redevelop London city and make it modern, and areas that were not performing very well as assets were redeveloped in a planned fashion. So in a brownfield development cycle, the land which was sold historically, there's a big demand but low supply, so the values remain up. Then with planned redevelopment, new stock happens and new values come in, so you're unlocking the value of the land. The second development cycle is a greenfield development cycle, where new land is aggregated generally on the peripheries or the suburbs of large cities. There is a big supply but low demand because it is far away from the city. When the development begins and the livability goes up, then the values go up. These are the 2 distinct development cycles in the Indian real estate market. In India, a new project starts, the plots are sold, the prices are low, apartments are released, the unit price goes up, then the plot values go up. After that, you see that it has reached critical value, then the investors exit and the living starts. This is what has been happening for a long time in the Indian real estate market. Now, the point of entry into the property market is very important. There are many stages at which you can enter. One is pre-launch, when the developer has not got all the approvals, expects the approvals but hasn't got them yet. So the prices are low because the approvals are awaited. The buyers are few because there is some risk involved and the risk is fairly high. At launch, the moderate prices, it starts at moderate prices. There are many buyers and the risk is moderate. During the construction stage, the prices remain moderate, but the buyers start dropping. At launch, there are many more buyers and the risk is still moderate. About 6 months from possession, the prices start going up and the prices become high. There are many buyers, but the risk is low because the asset is already more or less complete. So, you know, the structure is complete and finishing is happening. At possession, the prices become high. And here, how high it becomes depends on the market cycle, the demand in that locality, the amount of stock in that market. All that impacts how high the prices can go at possession. The buyers are many because these are end users who are buying off the secondary market, and there is no risk because the property is ready and you can buy and do whatever you need to do inside the house and you can start staying there. You can buy from a secondary market that is in old established areas, but here the prices are high Buyers, whether, again, it depends on what the demand in that market is, and the risk also depends on how old the property is, and many, many factors have to be considered. Now, look at how do you manage your property portfolio? Just look at it like this: from launch to possession, your property takes roughly about 3 years from launch to possession, and on an average appreciation of about 2x. If you bought it 1,500, it will become 3,000. If you bought it 3,500, by the time it's ready, it's about 6,000, 7,000. This has been the trend in the last few years. But if you look at the after 5 years, you hold your property for about 5 years. After 5 years, in 3 years, the rise is only about 10%. And then it reaches a tipping point when the property values are at its highest. After that, it starts coming down. And you have to be able to constantly read your market to figure out whether you should remain invested or you should be exiting that market. Now, how do you choose the entry point? When you're looking for a home for self-use, first consider your budget. Whatever your budget, check on, one good way to do is go to a property portal like Magicbricks, put your requirements, and you get a series of properties that fit your budget. Next, look at the size and the configurations that are available. In some areas, the sizes may be small because those are expensive localities, but that is where you would like to see. And you would probably get a 1 BHK or a 2 BHK. If you move further away from the high demand areas, you will be able to get larger sizes and in better configurations. You may be able to get 3 BHK within your budget if you move further away from the city center. Next, look at the amenities. Amenities actually determine how comfortable your life is. Especially as an end user, you must look at the amenities. It means your proximity to business hubs, entertainment centers, retail centers. Can you conveniently shop for your daily needs very close to where you are staying? Otherwise, you'll have to take a car out every time you want to buy bread and eggs. That is an inconvenience. So these are some things that you have to choose before you buy for self-use. Then first start thinking about, you want to stay in established areas, in old localities, redeveloped areas. So these are all things that you have to consider if you are an end user. In established areas, the quality of life is up, the values are up, and the occupancy is high. So there are few properties that come up into the market, and those are the ones that will be priced high. In older localities, within the established areas, the quality of life starts coming down, the values remain up, but what really happens is occupancy starts dropping. And this is especially because you buy where you can afford to buy, but when you are leasing a property, you lease in a place that is most convenient. If the convenience drops, then the occupancy drops, the tenancy value drops. When properties are redeveloped, the plots are sold to unlock the land value. The new values establish price benchmarks, and the quality of life goes up because these are newer properties and they are more modern according to your present requirements. Property prices always move in a linear direction. Areas that are closest to the center, and it's like a hub and spoke. The hub has the maximum value. The hub could be the commercial hub, it could be an entertainment hub, it could be an educational hub. Whatever the hub, the hub commands the maximum value. If I've taken some examples from Mumbai. If you take, we took the CST, Mumbai Central as the hub, and from there, Carter Road, the prices are very high. Lower Parel, prices reduce a little bit. It's 11 kilometers. Powai is 8 kilometers, but there are other factors such as lots of stock, the whole township is there, and then a lot more properties are around. So there are other factors that can impact it. But remember that as you move away from the city center, the size of your property progressively starts going up, and the amount you pay for a larger property starts coming down. The markets operate in extremes. There will be investors and end users in both ends of the spectrum. again, I've taken a Mumbai example. If you take Mira Road and Godbanda Road, lots of demand because there is a never-ending demand at the base of the spectrum where low prices, people who have limited budgets who want to buy and traditionally have not been serviced by the Indian real estate market. On the other hand, we are seeing a gradual rise in demand for high-value properties, luxury premium properties, which are in Lower Parel, Prabha Devi, and so on, and we see a unending demand. At one point, it was about 5% of the total demand. Today, it's a very, very healthy 11 to 12% of the demand. This is because the property markets have been slow. For the last 2 to 2.5 years, the property markets have been fairly slow. As a result, people who had bought in a previous cycle in the 1990s, in early 2000s, people who had bought could now start thinking of upgrading their property. They buy into a new property, start paying the EMIs, maybe with a bank loan, knowing that when the property market go up, they can always exit the property that they are in currently, sell that off and pay off the loan. And a lot of people across the country have been doing this. The investor appetite, it never dies, but the location preference changes with your budget. In slow market conditions, when people don't want to invest too much, this is typically the 2009-2010 kind of cycle, people did not stop buying. They bought very far away from the city. For instance, if you were on SG Road, you went far away from Ahmedabad city. And in Bhopal, Airport Road is a very long road, and they started buying far away because it was cheaper, and they felt that, rather than not buying, let's buy something that's far away because values are down, you could get it cheaper, and then maybe exit that property and buy closer when the market cycles improve. When the market heats up, the consumer starts buying very close to the city center, wherever they want to stay. The Mumbai investors had reached Pune. Investors moved towards Ajmer Road along the DMIC, the Delhi-Mumbai Industrial Corridor, because the Jaipur market is weak. So when the markets regained, the investors started investing in plots near the city on the same stretch. And this is happening because all transit corridors, the NH8, NH24, NH58, these are all corridors of development, and all real estate development in cities are happening along these corridors. Let's take one case study, for instance. In the current scenario, with a flat property market, there are few launches and fewer transactions. Hardly any transactions happening in the market. Slowly it's picking up in some markets, but it has been a very, very slow market condition. The stock market is racing ahead in a bull run. You know that the stock markets are breaching all known limits. They're yielding short and medium-term returns. So what happens? Right now, think of it as an opportunity for the property buyer. Today, aggressive negotiation is possible in property deals. And all levels of stock are available at launch, under construction, soon to be completed, and completed stock. So what can an investor do? The investor can buy into a subvention scheme. This is just a suggestion. This is not the only way you can buy, but we took one scenario. An investor can buy into the subvention schemes where you pay 10 to 20% and the rest on possession. So effectively what happens is that you don't have to pay anything more than the first couple of installments, and then you wait till possession. That's roughly about 3 to 4 years. Now, while you don't have to pay to the developer or the bank, consider as though you have to pay your monthly EMIs. Take a figure that you would have been comfortable with as an EMI. Let's assume that is 20,000. Take that 20,000 and put it into monthly systematic investment plans where the market's performance will help grow your money. If you do this for 4 years, what happens is you keep booking profits or allow your portfolio managers to keep booking profits on your behalf as the real estate stock markets go up. By the time your property is ready, you would have had enough money out of your EMI, out of your stock market investments, which would have given you at least a 14% rise in bear runs and a 24% return in bull runs. Sometimes even much more than 24, where I'm taking a conservative estimate. A systematic investment in the stock market never goes wrong. bull cycles, bear cycles, everything is taken care of. Just don't exit the market when it is at its lowest. That's the only thing that you have to consider. When you have to pay for your property or on completion or post-possession, you will use these funds to put down the principal by up to 25%. Now what happens is that your EMI, the equated monthly installments in your systematic investment plan has actually helped you to grow your money to put down the principal, not the interest. If you were paying your EMIs to a bank in the beginning, you're paying for the interest component and not the principal amount. But when you've invested it in a systematic investment plan with a bank or in the stock market, you would have grown your money and the principal has now come down. So by the time you have taken a loan from the bank and when your EMI start, you're paying a much smaller EMI, and that is the way to offset the property market and the real estate market, the property market and the stock market. You have got the best of both if you are a wise investor. Now, how do you balance your portfolio? If you're an end user, you've bought with whatever money you have, you bought the best that you want. Suppose you are an investor and you have a little, let's assume that you have about 1 crore to invest. Should you buy one large house? Should you buy 2 houses? How do you decide what to do? Let's look at it in a systematic fashion. If you buy a large property, you're buying a single unit, you get a high rental return, but it has low liquidity because selling a bigger property is always more difficult than a smaller property. There is high risk because when you want to exit, you may not be able to exit very fast. The single unit has a higher taxation. If your house is lying idle, you have to pay a wealth tax. You want to keep it on rent. Even if for a certain amount of time, if your house is not on rent, you have to pay a wealth tax. If it's a large property, a larger wealth tax. Then your maintenance charges, your water, electricity, these are all outflows whenever the property, you've taken possession of the property. So if it's a large unit, all this will be larger. And all your investment has been concentrated in one market and at a single stage. You either buy at launch or in the middle of the cycle or at the end of the cycle, but you've bought everything at a single stage. What are the advantages of buying multiple properties? One, you get low rentals, but you're getting multiple rentals. If you bought 2 units, you get 2 rental returns. If you buy 3 properties, you will get 3, right? And your liquidity is high because smaller units are always easier to dispose of than larger units. When this happens, you will find that you may not be able to sell 1 unit, maybe because there's not much demand, but there's another unit that you can dispose of and cash in. The risk is a little lower here. And with multiple units, you have lower taxation because if you have 3 properties and they are on rent, suppose 1 is not leased out for some time, your wealth tax correspondingly comes down. And you are spread over multiple markets. You're not buying 3 properties in one market. You're buying 3 properties in 3 different markets, and that helps you to spread your risk. And you have an option to choose multiple stages of property. Now, when you buy property, you must always plan for an exit strategy. There are 4 points of exit as I see it. One is after you pay 20% and before registration. Here, you are not incurring the registration charges, but you've paid and you've taken the advantage of entering very early in the cycle. After that, when you exit, you get much better returns. 6 months from possession, the values, like I showed you in the beginning, the values have started rising. That's the time when, as an investor, you start exiting and selling to end users. 6 months after possession, when the occupancy has gone up, that is another time when many end users come in, and that is also a time when there's high demand and you can sell off. 2 years after possession, the values have definitely gone up, and it's very close to the peak, and you may want to exit at that time. Beyond this, how much longer the values keep going up is a function of many local factors, and normally property values peak between 3 to 5 years. You must keep monitoring the value if you are an investor, and don't be afraid to sell. You are an investor. Don't be emotional about buying property. As an investor, when you come in, it is another asset in your portfolio, and you would like to start exiting and investing somewhere else to keep getting better returns. Thank you. I'm glad all of you were participating in the webinar. Do post your questions. I'll be happy to answer as many questions as you like. Over to you, Aradhana. Over to you, Aradhana.
Thanks for the insightful presentation, Jayashriman. I would now request you to take up the questions. You need to read out the questions and their answers so that all our users may listen to your insight.
Okay. Let me take my first question here. What is a better option to invest in, asks Umesh Pawar, a plot or a flat? Umesh, it's like this. If you're buying a plot always gets you a better return than a flat. But a plot is more difficult to maintain, and you have to hold it for at least 5 years before you can get good returns. If you're buying a plot, you must be able to put your money there into a plot by maybe a private developer who is maintaining the entire area, where development is going to happen in a planned fashion, and where people like you have been buying. If you buy from non-formal sources, then you may run the risk of the property having appreciated, but you don't know whether somebody has encroached a little bit and so on. So plot is more difficult to hold, but it appreciates more. Apartment is something that has been giving very good returns and is very easy to manage because it is one unit in a well-managed complex. So that is why a lot of people prefer apartments rather than plots. A second thing that you must consider is that if you are looking at getting a regular return out of your investment while you hold it and wait for the leverage value to go up, there the apartment gives you a rental return, a plot does not do that. Umesh Pawar has asked again, what should be the triggering point to consider while investing in property? The trigger is always, when would you like to enter the market? I feel that the earlier you enter the market, the better for you. When you are young, you get a long period of loan, 20 years, 30 years, banks accommodate all that. Also, you may have less money in hand, but remember that every year your salary does go up. So the EMIs start becoming easier and easier, and you may feel that I may not want to hold it for 20 years. I'll give you my own example. I had a loan which I had taken for 12 years, but at some point I felt that I don't need 12 years to pay it off. I first commuted into about 7-8 years, and then finally paid it off in 5 years. That's because your salary, when your salary goes up, there's no reason for you to hold a loan for so long. You may want to exit the loan and then start investing in something else. And or at the, while you're planning there to invest, you may also want to use the stock market. That's again something that we have done. We do invest in a systematic investment plan, and whenever we want to buy property, the returns out of our investments help us to buy the property rather than using the principal. So you have a nest egg set aside, and the rise of the stock market helps you take out money and book profit whenever you need to do that. Let me take another question here. The current yield on real estate is 3 to 3.5% per annum, while our FD gives 7 to 8% return. I'm tempted to sell my property in Noida Sector 119, put the money in infra bonds to save myself from long-term capital gain, and re-enter the market after 3 years. By doing this, I would have at least got 8% consistent appreciation. Do you think this is a good idea? This is especially for the Noida market, Sector 119, where even the metro is not coming and there is a huge supply. Now, Girish, this is a problem that many people are going to face. The Noida market, when everybody was investing in the Noida market, it seemed like a place where everybody could come in because the property was relatively more affordable than many other places in India. And that was also because of a reason, because the Noida authorities had allowed developers to amortize their property land payment over 7 to 8 years. So if the land came cheaper, the developers were quite willing to create low-priced property so that you could get more consumers coming in to buy. Now, while it was a very attractive proposition then, and a lot of people have actually booked profit because they invested early, then started selling out and all that, the Noida market has had 2 or 3 setbacks. One was that land acquisition problem where the farmers' agitation happened and there was a lot of uncertainty in that market. The second thing was when the National Green Tribunal said that development within 10 acres, I think 10 acres around that area could not, around the bird park could not be developed upon, and again that market faced a slowdown. A third reason why the Noida market is slow is because there is a lot of stock happening, coming up, and you may not see a lot of fast rise in property values. However, if you hold your property, the rental values are likely to rise. Now, Girish is referring to a specific problem. The metro has been announced and Sector 119 has been left out of both the lines, whether the Sector 62 line or the other, the Greater Noida line. Sector 119 is not part of that. So will it appreciate? Maybe not, because metro is a very big driver. And if you feel that the place where you've got your property, there are going to be other properties that will appreciate more than yours, maybe it is a good idea to exit that property, put your money into long-term capital gains, and buy when you see the right property coming up. You can re-enter the market after 3 years. You wouldn't have lost anything because, like you said, you are getting an 8% return, and if you had kept it on lease for some time, you would only get 3 to 3.5. So it is not a bad idea. You should do it because there is lots of supply in the market, and your property may not be best positioned to get future returns. Now, we've got Harmeet Singh says, can I get a tax rebate on plot plus construction if I take a loan? Harmeet, I am not a tax expert. However, I'm going to take your query and pass this query on to our taxation expert, and we'll get you the answers. Do visit open house. We'd be happy to give this answer because I don't want to give you an answer in which I am not an expert. We've got Sagar Suri who says, I am a broker. How to catch people from the market to invest? Sagar, this is the million-dollar question that the entire property market has been asking for the last 2 years. What does it take to bring the buyer back into the market? Now look at it in this fashion. Why did the buyer stop buying? One was that, yes, there were global economic slowdown, there was an economic uncertainty all over, and people stopped buying. But more than that, I think it is because the market itself did not treat its consumers with respect. A lot of end users, a lot of small investors who bought properties in all good faith had their properties being delayed for up to 7 to 8 years. In many cases, what was given to them was way below the specifications that were promised to them. As a result, in India, I don't think it's a crisis of finance. I think it's a crisis of sentiment. When the sentiment is weak, how do you bring that buyer back into the market? You have to lure the buyer back into the market. And I think all the interest rate subvention schemes that many developers across the country have launched have actually, maybe not in great volumes, but they have brought the consumer back into the market. Today on Magicbricks, we see that the consumer is actively looking for property. Maybe transactions on the ground have not happened to that extent, but the consumer is actively looking for property. So what does it trigger? What does it take to trigger a buy? One of the biggest triggers will be the governor of the Reserve Bank of India has promised that interest rates are going to come down. The consumer today, I think the last frontier that the consumer has to cross is the home loan interest rate, and many consumers across the country are waiting for the home loan interest rates to come down. The reason for this is because when the consumer takes a loan, for instance, today if he takes at 10 to 10.5%, and when the rates come down, the benefit is not immediately passed on to existing consumers by banks. The banks take a while to pass the reducing interest rate to consumers, and that is the reason why consumers have realized that they are losers if they take at high interest rates, or they will have to go to another bank and renegotiate rates. I suspect, and we've been producing the property index and the housing sentiment index, which we do in association with Indian Institute of Management, Bangalore. The housing sentiment index has clearly showed that the consumer thinks that the prices are going to go up. They don't think the prices will come down any further. Across the country, all consumers know that prices are going to go up, but they are willing to wait for a while for the prices to go up. Aradhana, I have a small technical problem. I'll have to resume after a minute.
Of course, ma'am. I request our audience to please be patient. We are just going through a little glitch. We would be back online very soon.
Aradhana, I think I'll have to log on again.
Of course, ma'am, you can do that.
Okay, just give me a minute. While I'm doing that, would you like to read another question to me? I can start answering the questions.
Of course. So there are questions coming in from Dhiren Thakkar. He wants to ask,
Yeah.
I want to invest in commercial property and my budget is 30 lakhs. What return should I expect? I want to invest in Ahmedabad in Gujarat.
Dhiren, I would say that commercial property has, normally yields between 8 to 12% returns across markets, depending on which part of the market you're investing in. But in the last 1 to 2 years, there has been very low commercial take-up, and that is the reason why we have seen a slowdown in investment in commercial property. However, in some markets, the commercial property take-up has happened, and you have started getting rental returns, and therefore the investors are coming back. However, I would say that, as small investors, you should refrain from investing in commercial markets at the beginning of a pickup in the commercial cycle. There is some amount of returns that you're getting. So if you're buying into office complexes, office properties have started performing a little better. However, if you're investing in retail properties are not doing well across the country. And there are reasons for this. One is that the consumer is not in the active buy cycle, so brands are not increasing their investment. The second thing that we can see is that because the online sales are happening so well, large retailers are rethinking their strategy, and this is a bad time to invest in retail for the small investors. As a small investor, I would say do hold back for another 6 months. When the market cycles start picking up significantly, that's when you can start investing in commercial. This is a personal opinion, but this is the way we read the market right now. Aradhana, the next question.
The next question comes from Sagar Suri. He wants to ask, is this the better idea to suggest people to invest in subvention rather than other plans? Not necessarily. Sagar, when I asked you to invest in this subvention, that is for people who feel that they have a small amount of money right now, but can invest systematically over a period of time. If you find there is a property that you have that is already complete and you would like to take it, remember that you're getting a rental return. So somewhere you have to invest such that you start getting good returns on your property. Don't hold it for a large period of time. If you buy in a project without subvention, am I saying do not buy into a project without subvention? No. That is there will be other factors that you have to consider. If you have any queries, if you have shortlisted any other property and you have any more queries, you're welcome to put those queries here, and I would be happy to answer them on a case-to-case basis. But as a global truth, I found that right now, with the kind of subvention schemes that are being offered, those seems to be good offers, and that is the reason. Even there, you have to do many checks before you put your money. Just because there's a subvention scheme doesn't mean that that would be a clear winner. You have to check the background of your developer. You have to know that you're investing with a developer of credibility. Only then will you get returns. Yeah, Aradhana, next question. Is it a better option to buy in the affordable project recently launched in Gurgaon, or shall I go for a subvention scheme so that I save on my EMIs during the construction period? This question comes in from Akriti Sehgal. Akriti, if you don't have another property in anywhere in Haryana, if you don't own any property in Haryana, then you are allowed to buy into the affordable projects. There are many riders that the government has placed on these projects, these properties. One is that you must not possess another property in the state. Second is that you cannot buy more than one property. You will be able to, you have to pay, buy a form for 100 rupees, pay in I think about 1,000 rupees as an initial deposit, which is refundable. But the property that you get is through by draw of lots. Also, after you buy that property, you cannot exit that property for at least 5 years. The reason why all these riders have been put in is because the affordable housing scheme is for those people who genuinely cannot afford to buy a larger unit, and these are small units, 350, 500 to roughly about, I think the largest is about 700 square feet, and you will be able to buy smaller units at affordable rates. That is a good idea. But
remember, if the size does not match your requirements, then an interest rate subvention scheme is a better idea for you, because you would be able to buy whatever your size or requirement, you will be able to buy into that. So you have to first list down what are your requirements, see where you want to buy it, because in Haryana, in Gurgaon, there are a few schemes. There are in other parts of Haryana as well. Then see whether which one better suits your requirements, and then buy. You can consider both and see. After that, after looking at this, if you're still confused, come up to open house and post your queries there. We'd be happy to answer your queries. Next question, Aradhana.
Rajarshi Banerjee asked, I want to invest from rupees 30 to 35 lakhs at Kolkata. Can you suggest me anything in particular for a good return?
Rajeshi, you have a lot of options in Kolkata in this budget. You have places in Rajarhat. Actually, I'll tell you what the best way to do it is. Go to Magicbricks, go to the Kolkata page. There is a search box there. Go there and post your requirements, your size, your price, your the specifications, the configuration you're looking for. Once you do that, you will get a list of options that you have. And I'm 100% sure that within 30 lakhs, there are many, many options for you in the Kolkata market. Once you look at that, now start narrowing down. The first thing that you start with is the budget. That tells you where all you can buy. After that, you select a good developer. You select the locality that is most convenient for you. Select the configuration, 1, 2, 3, 4 BHK, whatever you need, the best that fits your budget. After that, look at who's the developer and what are the amenities that you're getting. Sometimes when you have a small budget, it is good to go with backups such as power, water, and so on. It's so all right if you don't get a clubhouse with it. A clubhouse you can access somewhere in the locality, but you must get good quality backups, because that makes your life far more convenient. Is there a good transport infrastructure? Can you access the other parts of the city through that? All these are important considerations when you're looking for a house, but we'd be happy to give you any more advice. If you need more advice, come to openhouse.magicbricks.com, post your query, and we'll be happy to answer them again. If you have any more queries, you can continue to post your questions here. Aradhana, next question.
Next question comes from Gaurav Bhalla. He wants to know if I am buying a property out of city from Indore, approximately 20 to 25 kilometers for investment purpose, what benefit I can get in future?
Gaurav, when you buy in the Indore market, it is first invest in markets that you're familiar with. If you're unfamiliar with the market, make yourself familiar. Consider why you're investing in Indore. If you are from Indore, your family is from Indore, you have business interest in Indore, please go ahead and buy in that market. If you don't, make yourself acquainted. Find out why Indore and why not Jaipur. Why Indore and why not Bhopal? You have to be sure why you're investing into a market. Don't do it because a neighbor did it or a friend did it. They must have some reason for doing that. Now, if you are sure of that, then go and check whether the developer that you're choosing is a small local developer or a large national developer. If it is a large national developer, please check out that developer's track record. Have they been delivering on time? Have they been delivering quality? Have they been keeping the promises? If they assured you a certain specification at the time of sale, are they actually delivering those specifications also? Then that is a developer worth going with. Another thing that you should look at is there's no harm in buying from local developers, but look at their track record. Have they delivered? Sometimes it's good to go visit their earlier projects. Are they being maintained well? Because a property is a long-term asset. You want to be sure that whoever you're buying from is also taking care of the asset into the future. Otherwise, if you buy into a large complex and it is left to individuals to manage, you may find that the asset quality starts deteriorating and you won't get very good value for your property when you want to exit it. If you're buying a few kilometers from Indore, if it is away from the city, are you buying into a place where there is nothing around? There is promise of a future, a vague promise of a future return. I don't think end users should go there. A small investor should also not go there. Go into markets where you can see the potential of the market, where you can see that the market is going to appreciate in a certain period of time. That is the kind of market that will be good for small investors like you. Please go to the next one, Aradhana.
Yes, of course. Which developers are safe to invest within Noida? Also, which areas can give good returns within 1 to 2 years of time? This question is from Raj Yadav.
Raj, I discussed the Noida market in a question that I answered earlier. The Noida market is one where there is huge amounts of demand and growing demand from end users because it is an affordable market and good quality properties are coming up here. However, it is a market that is going to be saturated and choked because there is a lot of property that is going to come. Thousands of units are going to come up from now for the next 5, 6, 7 years. If in a market like that, if you enter today, the people who entered very early have entered at very low rates. Today the rates are not that low. The rates have actually grown. And will it continue growing? I don't think the rates will grow when the stock is growing. The rates will stabilize for some time and the property prices will go up only after a while because there is a lot of stock. And therefore, is this a market where you should be investing for 1 to 2 years return? I don't think so. I think you've waited too long to enter this market. Please look at other markets which don't have so much stock. Those are the ones that will give you better returns. The next question, Aradhana.
Next question comes from Dhiren Thakkar again. He wants to know, for the rental income, what is advisable now? Is it residential property or commercial?
Dhiren, not commercial. Like I said, small investors should keep off commercial property for a while because while there has been some amount of take-up in commercial property, and commercial property does yield much better returns traditionally than residential property, but it has been a slow market. It is expected to continue to be a slow market for at least another year or so. So if you invest into the commercial market right now, you're not sure when those markets will pick up and whether the property that you bought into will actually give you good yields. Therefore, I would still say invest in the residential market, remain invested for till the property markets pick up. After that, decide whether you want to switch to commercial investment. This is specifically for small investors. Large investors, HNIs, have continued investing in commercial, but if you are a small investor and you are a new entrant into the property market, I would still say residential is, it gives you 3 to 3.5%, but that is still a regular rental return because there is rental demand. If you want rental returns, buy in those places where there is rental demand, which are close to commercial hubs, which are close to educational hubs, which are easily accessible via transport corridors. Those are the ones that give you best rental returns. Next question, Aradhana.
Yes, I want to invest around rupees 25 lakhs in and around Gurgaon purely for capital returns in 5 years of time. I am looking at Bhiwadi. Is it a safe investment? Asked by Lalit Kumar Negi.
Lalit Kumar Negi, Bhiwadi is definitely a safe investment. There is current demand, future demand. It is going to be on the Delhi-Mumbai industrial corridor, so there will be a bump up in the rates once that happens. But the Bhiwadi has been more or less a plateauing market for some time now. So if you're buying, buy with a good developer. Make sure that the developer has a good track record. There are a couple of very, very good developers building in Bhiwadi. You should think of what type of property, and I think many developers are actually helping you put your property on rent so that your rental return is also assured. If you once the DMIC corridor, and that still hasn't taken off, it will take off once all policy hurdles are cleared, then Bhiwadi is a good investment, good returns prospect, but you will have to hold it till then. Next question, Aradhana.
Shahid Abbas says, I have a very general question. What is the current trend in real estate industry throughout all the major cities in India?
It's really a general question. There are real estate trends across the country, which is that it is a slow market. Investors are holding back for some time. They're waiting for the home loan interest rates to come down. They are also actively searching across the markets. Any property that is in the sub 20 lakh category is being picked up instantly, which explains why affordable housing projects that Haryana has launched have been doing well. In Delhi, 25,000 properties released by the Delhi Development Authority. The application ran into lakhs, and you could see that that was a big hit. Today, the lower ends of the market are moving. There is definite demand for luxury properties across cities. IT and manufacturing corridors are driving a lot of the growth in most cities. If you look at places like Chennai and Delhi, you're seeing old traditional areas being redeveloped. Redevelopment properties are doing well in most Indian cities. And you're also seeing whichever city has been announced as a smart city, there is more user interest. Having said that, end users are buying actively in the market, looking actively in the market. Expect them to start buying now. I think that is as much as I can tell you for such a general question. Aradhana, next question.
Next question comes from Gauri Sharma. What is the potential growth of Uttarhalli area? Is the area good for investment?
When you ask me about specific markets, I would actually prefer to do a little bit more research and check out on Magicbricks with our data and then get back to you. However, we have been writing about these areas on content.magicbricks.com. If you look at, go to content.magicbricks.com, check out Uttarahalli, you will get articles that we have written. However, I'll be glad to park your question and answer that with some more details. Radhana, next one.
Next question comes from Rajkumar Chandana. I am from Hyderabad. I have already invested in Shadnagar, Ravulpalli and Chivala. Now I am planning to invest in Yadaragiri Gutta for long-term investment. Please inform me whether my investment is correct or incorrect.
One way you can check out whether your investment is correct. No two people's investment decisions are the same. If you have invested in 3 properties, you've obviously done your market research and figured out how and why you're putting your money into these properties. What you have to do is maintain real estate as a portfolio, just the way you do with your stocks and shares. List the locality, check out the prevailing market rates, check out the rates at which you bought it, and maintain a chart. Is your property value going up? In Hyderabad, it's a slow market, but a market full of potential. The Hyderabad market is probably the lowest priced market in the country today. Which other city can you get a villa property for 60 lakhs? Nowhere. But in Hyderabad, you're able to get luxurious villa properties for 60 lakhs. With a 1 crore budget, you can buy really large properties. But again, think about why you're investing and how long you want to hold. You've already made 3 investments. You want to make a 4th investment. Are you investing in different parts of the city? Do you want to invest in another city as well? Because people who have invested in Hyderabad are also looking at places like Vijayawada and so on. Are you planning to, how long will you plan to hold all your properties? Like I've said in my presentation, make it a portfolio analysis. When did I buy? How much did I buy for? How much is it appreciating? When do I want to exit? Will I exit in a time frame, or will I exit when the market reaches a certain level? All these are important decisions. Once you do that, you will be able to assess for yourself. But do your research. On Magicbricks, we have a whole section called advice.magicbricks.com where we tell you the rates and trends. We give you access to experts who will be able to answer your queries. We answer a lot of your queries. Go to the localities that you have mentioned. We've got locality reviews. see if your locality has been reviewed. If there's anything that you want to add to the review, please do so, because right now we have a very interesting scheme running, which is called the Magicbricks Santa. The more activity you do on our knowledge portals, the more you will be rewarded. There are daily prizes to be won. Do come back and check out and see if your questions have been answered. If not, post your query on openhouse.magicbricks.com. We'll be happy to answer them for you. Aradhana, next query.
Next question comes from Roshan Lobo. He wants to know, please let me know the potential of Jakur in North Bangalore.
North Bangalore markets have been in demand from investors, but one of the things that has been an area of concern is water. So if you're buying in a property there, figure out whether there is enough water in that locality. The second issue that you have to check out is whether there is any commercial development in that vicinity. If there is commercial development, the chances of your values going up, the chances of your residential values going up is very high, but you have to be in the right location. Therefore, study the area around it. Actually, a lot of people have been asking me whether you should invest in one locality or the other. I think you are your best judge, and for that we are giving you all the tools to make the right decision. Check out the locality, check out its profile, how do other users rate it. It's very much like using a TripAdvisor when you go for a holiday. You look at what other users are saying, and that gives you a end user's perspective. The same thing should be done when you're investing in property. However, if you still want us to study that area and tell you whether it's a good investment, give us more details. Which is the developer? Which is the development? Why have you chosen Jakur and not another locality? We'll be happy to answer your queries. Aradhana, the next one.
Next question comes from Nakul Sharma. He says, I am from Thane. I want to know that market rates are going to come down or not, because I am planning to sell my 2 BHK apartment, values 1 crore. So should I buy 1 BHK apartment if market goes down, or should I buy commercial property?
I don't see any property markets coming down. They have come down as much as they had to in the last 2 years. There may be some reason, if there is some small local reasons why a property market comes down, maybe some drainage issue or some civic issue or a policy issue, that's a different issue. But otherwise, property markets are either stable or going up. And in the future, you have seen that there has been a lot of positive sentiment in the market after the new Prime Minister has come in, after there have been a lot of policy statements that have come in. We expect that to keep continuing in the future, and both the stock and property markets are expected to pick up. The property market needs a little more direction, and we expect that in the next few months, especially around till the budget, we expect a lot of changes to happen that will push up property markets. Do not wait, hold on to your property thinking that values will come down. Values are either stable or going up. They are not coming down, not in the near future. There is no indication that property rates will come down. Having said that, nobody has a crystal glass to look into and say when property rates will go up or down. But indications are that the markets are expected to go up. Yeah, Radha.
Yes, due to time constraint, we can now take only one question. So
let's take the last question. I think we are well past our time now.
Yes.
So let's take one last question.
All right. This question comes in from Madhur Reddy. He says, I have ready cash of rupees 5 lakh. There is no way I can invest in real estate. Do you suggest I invest in capital market or gold now? And when will REITs be a reality?
Mr. Reddy, like you, there are a lot of consumers across the country who do not either have the full amount of cash to invest or in property, or who do not want a piece of real estate at the end of it, who are waiting for REITs to lay out. Currently, though REITs has been announced, we don't have any, the policy has not played out, and therefore we don't have REITs for the small investor yet. It is expected that the markets will be opened up to REITs very soon. Once that happens, people like you will be able to invest. Right now, you can't invest 5 lakhs into a REITs option. Whether you should invest in stock markets or gold markets, your financial advisor, the stock market analyst, will be able to tell you. What we can tell you is, if you have 5 lakhs and you feel that there is a property at launch which you may want to invest into, go for one where there is a subvention scheme, but then you can only do that if you're sure that you will have more money to pay the complete amount. Otherwise, you will have to invest it into some either systematic investment plans or something like that, where your money will grow so that you can buy the right property that you're looking for. Thank you so much for attending our webinar. I really appreciate the fact that so many users have been logged in and have been asking queries. Like I said, this is an ongoing exercise for Magicbricks. We'd love to answer all your queries. If there are more queries, we do keep attending our webinars. Do keep posting your queries on openhouse.magicbricks.com. And remember to come log in to the advice.magicbricks.com. Check out all the features that will help you to make your wise property investment decisions. Thank you so much for attending.
And I'm really thankful to our guest speaker today for conducting this. Thank you, ma'am. And I'm really thankful to our guest speaker today for conducting this informative webinar with us. It was indeed a great session. I would also like to thank all our participants for their support in making this webinar a success. Thank you all for joining us today. Thank you, Jayashree, for taking the time out and having us. I hope you have a great evening ahead.
Thank you. Bye-bye.
Thank you. Bye-bye.